In today's episode, once again, we are speaking to the amazing Robert Rolih. Robert is an internationally best-selling author of the book, The $1 Million Decision, Get Out of the Rigged Game of Investing and Add $1 million to Your Net Worth. Robert has been featured in some of the amazing 50 media outlets, including Yahoo Finance, Newsmax TV, Bloomberg, and many others. Robert has also shared the stage with people like Gary Vee, Tracy, Canfield, Ryan Deiss, and many, many others. Members of his flagship long-term investing course are constantly outperforming the best Wall Street experts. And today we're speaking to Robert to find out the magical financial success formula. And if you want to know how you can upgrade your money mindset, click on the link www.millionairefoundations.com and watch my free training and then find out how you and I can speak. Welcome. This is Gull, your money mindset expert. And once again, we have the amazing, we have the talented, we have the charming Robert Rolih. Welcome, Robert.
Hello, it's a pleasure to be here.
Thank you so much for coming back, Robert. We had such a fantastic conversation on Friday Feature. We had to have you back on Money Talkies. Robert, once again, everyone's heard how amazing you are, but please, in your own words, tell everybody what it is that you do.
Yeah, so in short, I help investors, I help people outperform even the best Wall Street professionals without short-term trading and without taking excessive risks. So I run an online course where I try to translate all this technical financial jargon into easy to digest things, that people can take and then start to invest on their own without the help of financial advisors and bankers and so on.
Wonderful. Robert, when I read your book, and that's how, initially I was introduced to you through your, a webinar, and then I got your book, and I got an audio book, and then obviously I joined one of your programs. In your audiobook, you talk about something called the financial success formula. What is that? Can you talk about that, please?
Yeah, I usually say that this is the most important formula of our financial lives. If you don't understand this formula, you will never be wealthy. You will never be able to invest profitably. So it's super important. And this formula has two parts. The first part is money-making skills, and the second part is investing skills and money management skills. So you need to have both set of skills in order to be financially successful. So first, you need to be able to make money. So you need money-making skills, and then you also need to have money management and investing skills. And both these skills combined can provide you with financial security, financial success, maybe even lead you to financial freedom. So you need both sets of skills.
So this is made up of two separate. So it subdivides into money-making skills and investing skills. That's what we're saying. Okay.
Yeah. So money-making skills, they are the key if you want to increase your income, if you want to earn more. So these are skills like marketing, selling, negotiating, public speaking, and stuff like this, communication and so on. So these are the skills that will enable you, even if you have a job, even if you are a programmer or an accountant or whatever, they will help you to be more successful at what you do. Because a programmer who also has some communication skills and some maybe leadership skills or maybe some marketing skills will be much more successful than a programmer who only has programming skills. Okay,
of course.
So this is super important. And if you are a business owner, it's even more important because you can have the best product in the world, but nobody will know about it and nobody will buy it if you don't have sales skills or marketing skills. So this is these skills will enable you to make a lot of money. But then, even if you make a lot of money, if you don't have money management skills and investing skills, you will very easily lose all that money.
Yeah.
My case in point, for example, Boris Becker, a very famous tennis player, or maybe Mike Tyson, a very famous boxer. They made a lot of money in their careers, hundreds of millions of dollars, but they lost it all. They lost it all because they didn't know how to manage their money. They didn't know how to invest it. For example, Boris Becker, he invested in all sorts of crazy, investments, like some Nigerian oil companies. And later, they found out that this was basically all a house of cards. It was a scam. So if you are spending too much, like Mike Tyson basically spent everything, never invested in assets. He was just spending, and that is why he went bankrupt. So you need to have also investing skills and money management skills, because without them, you will never be able to manage the money that you earned with your money making skills.
100%. And I do believe. I always say this, that making money is one skill set. Investing and becoming wealthy is a separate skill set, and you do need to seek out mentors or help for both, either through books and courses or maybe programs. It doesn't really matter, but you need to get help with it. No one's born, I think, a natural born. I think that maybe there are a few exceptions, but most people need to acquire the skills of making money, and at the same time they need to learn the financial jargon, at least basics of it, to be able to understand and invest. And if they are reluctant to hand over the financial future to a financial planner, like I don't really believe in financial planners, and I don't think these financial advisors have the best interest at heart, then you need to find skill set for yourself to be able to do that for yourself.
Yeah.
So how do so talk us through, to break them down a bit further. I mean, we've worked out what skills we need for for money making. That's a complete different conversation. We had, I think we covered most of that on Friday Feature. Let's talk more about the second aspect of this, which is investing. Now, what do you see as the biggest pitfalls when people start investing?
Yeah, there are a lot of them. The first mistake or pitfall that most people make is they try to be too aggressive when it comes to investing. So they see a day trading course, or they see someone who is offering like some strategies to get rich quick, to make a lot of money with your investments overnight. These are usually all scams. And people lose money. So, for example, when you go to, if you start with day trading or forex trading or options trading or whatever, there is like 95 to 99% chance that you will lose all your money.
Yeah, and by the way, they say this to you when they say, majority of they won't give the percentage, but say majority of the traders actually lose money. They actually have this on their website. All of these courses actually have it, and even when you, whichever platform you use, they always bring it to your attention too that most people lose money.
But you always think that you are the exception. It will not happen to you, but it happens. It happens to even the best of you, even the best of us. I also, I also made this mistake in the beginning of my career. I spent almost 5 years to learn short-term trading and forex and stuff like this, strategies. But in the end, me and all of the other people that I know who joined these courses, we all lost money. And
myself included. I put my hand up, and a lot of money too, by the way.
So if you are just a bit more careful with your investments, if you think long term, and if you just choose the right products, where the financial industry will not rob you through commissions and fees, you can make infinitely more money compared to short-term trading. So short-term trading is almost impossible to make money for a long term.
Let's clarify this for people. Like, I know somebody who's made money. We do have exceptions who do make money, but more importantly, most people, if you make money day one, and it becomes like gambling. And let's just explain the pitfall, because I can speak from first-hand experience. No, I'm not talking about second-hand, first-hand experience. You make money one day, you make money day two, you make day three, and I promise you, the money you made on day 1, 2, and 3, you lose all on day 4. Yeah. If not, then next week. Yeah.
Let me give you the best example of that.
Yeah.
Hunt brothers. They were the rich. These were two brothers that traded silver in 1970s to 1980s.
Okay.
In 10 years, they became the richest people on earth.
Oh wow.
They were worth more than 10 billion at that time.
Okay.
Then they lost 96% of their money in just 5 weeks.
Wow.
In just 5 weeks, So this is something that happens like 99% of the time with short-term traders. They can have a winning streak, they can be very successful, but then they make a couple of mistakes and it's all gone. So it's very, very difficult to, a lot of people in the financial industry will try to convince you that you can make money by short-term trading. Stocks, crypto, options, whatever,
Yeah.
But the reality is that only the people who are offering these deals or these courses or whatever,
they make money.
Only they make money, and they are not trading on their own. They are just selling this stuff, and it's very toxic. Yeah.
Okay, so what's the average return that we can look for on for example, index funds? Because that's what you talk about, and that's one of my favorite ones as well. What's the average yearly, which you would say is a good return then? Because just to put realistic expectation in people's minds, what's a good return? What's the average return? What's below average? And what's the, people's perception? I think most people's idea is, well, if I don't do day trading, then the average return is about 5%. Is that true?
So if you take a look at history, and if you just choose stocks as an investing vehicle, this is something that is quite safe. And you don't pick individual stocks, but you just invest in the whole market.
That's what index funds are. So let's explain that. Index
funds, if I just simplify, it's just a basket of stocks, a very big basket of stocks. It's like investing in 500 stocks at a time. Okay, so that's basically index fund, and you are paying very low commissions and fees. Okay, this is in contrast to mutual funds that have very, very high fees. So by just investing in index fund, you are exposed to the, let's say, to the whole stock market, but you are paying just a small, tiny fee. Okay, that is not affecting your long-term returns. So historically, if you did that, you got approximately 10% average annual return. Okay, so this is average annual return. So some years it was plus 15, some years it was plus 25, but some years it was also minus 20. Okay, so but on average over the long period of time, it was around 10%. Now, will this happen also in the future? I believe that it's very, very likely that stocks will outperform most other asset categories, or maybe even all asset categories, also in the future. Why? Because when you are investing in stocks, you are investing in companies, and companies are always innovating. They are always developing new products and services that are enriching people's lives, and they are bringing new value to the market. So if the aliens don't invade, if the world doesn't fall apart, then stocks will very likely be a very good investment also in the future, But of course, nothing is certain, There are always scenarios where this, it can go the other way. But when it comes to investing, you need to think positively. You need to be an optimist, because if you are always like this doomsday scenario person, and if you are always afraid to invest, you will never start. But over the long run, only the optimists win in the investing game. So let me just give you one example. There are a lot of big names in the investing world that are always scaring people. For example, Robert Kiyosaki is an amazing author. He's an amazing person, but he tends to scare people about the coming stock crash and so on. And he was basically telling people, from 2012 on, the next year the biggest stock crash in history and so on. And he was repeating this doomsday scenarios every single year. And if you haven't started to invest at that time, you basically lost 200% return on investment till now. So I'm always encouraging my members to invest. Of course, now in 2023, we are a bit careful. We are not investing everything at once and so on, because I expect a recession and everything. But in general, if you don't start, you will never get these positive returns. So
Agreed.
it's very important to have this positive outlook about the world and where the world is heading.
I'm going to add to that, even a recession. I mean, most millionaires are made in recessions.
Yeah.
So it's not necessarily, a recession isn't necessarily a bad thing. It just means that, sorry?
Yeah, we are basically okay. Recession is a bad thing, but as investors, we are very, very happy that there will probably be a recession, because this will mean that we will be able to buy investments at a very, very low price. So we don't want a recession, of course, but if it happens, we will be ready with some reserves, and we will be investing when when everybody is panicking, when everybody is very pessimistic. This is the way how you can make really amazing gains in the investing world. For example, I was one of the rare investing experts who was urging people to invest during the COVID crisis of 2020. When the stock market fell by 30% in just a couple of months, we were basically buying at the bottom at the time. So when the crisis comes, you need to be ready, and you need to be brave enough to invest at the time, because the best returns can be made when investing in the bad times.
Agreed. And I think this is the point that I was trying to make, that recession or the circumstances that you have at hand, nothing's good or bad. It's your perception of it. It's how you take advantage of it. If the market's booming, that's great. You can take advantage of that and start investing. If the market's going down, then you can start building up your reserves and seek help, or do cost averaging, just buying regularly, because then that way you're not really predicting when the market's low. You just carry on doing it on a regular basis, and the cost averaging, it works out I think long term works out better than trying to predict when the market's low and then trying to go in.
Nobody can predict, when the exact bottom will be or the exact top will be. But you can constantly invest when the markets are falling, and you will be very, very, you will be rewarded handsomely in the future.
And I think another, so that thank you so much. I think that's great, and we'll wrap that up. But I think another one of mistakes that I really want to talk about is that I remember seeing a video of yours recently when you said, you're closing one of your programs because people have focused too heavily in that particular segment. And I agree with you. I think I have, instead of going proportionally, I did disproportionately, and most of mine is in that particular thing. And so I'm not disagreeing with, he knows what he's talking about. He's right. So what happens when there's a new craze that comes up with the new crypto coin or something else, and people go all in? There are people who lost a lot of money with Luna, and or a certain amount. And I think we in your group, we just lost a little bit, because I think you told us to remove beforehand anyway.
Yeah, basically we didn't lose with Luna. We made a lot of profits with Luna.
So average every year. We
sold 2/3 of that position before the crash, and it was very, very profitable for us, just Luna. But the thing is that whenever you are investing, you should never be invested only in one asset category. For example, you have asset categories are types of investments. For example, stocks, then you have bonds, then you have precious metals, crypto, and so on. And one of the biggest mistakes people make is to invest just in crypto, or to invest just in precious metals. If you do that, you are basically saying, I know that this asset category will outperform everything else in the future. But you can never know that, you can never be certain. So that is why you need to have a balanced portfolio, so that anything can happen. Okay, anything can happen, and you are basically exposed to all these different probabilities. if you have a portfolio that is not focused just on one thing, but it's a balanced portfolio. So you need to have this. And also when it comes to, for example, crypto or stocks, if you just invest in one stock, or in 3 crypto projects, and that's it, and especially if they are small ones, you can easily go to zero with that investment, because any company can go out of business. Any small crypto coin can go to zero. So you need to be also diversified within the asset category that you are investing a part of your money in. So this is super, super important. A lot of people will tell you, yeah, but if you go all in on a winner, you will make a fortune. Yeah, but you never know. For each winner in the crypto space, there are 1,000 losers. And it's the same for stocks. For each winning stock, if you invest in a small stock, in a small company, each small company that will become the new Amazon or the new Apple, there will be thousands of other names that will go to zero. Yeah. So this is the problem, that people have this bias that they think, oh, I can choose the winner, in advance. And some people got lucky, and they chose, and they invested in the winner like 10 years ago. But just think about how many people selected losers at the time. Nobody is talking about them. The media is only talking about the one guy who invested in Bitcoin in 2010 when Bitcoin was like 1 cent or whatever,
Yeah.
But most people didn't, So it's very hard. It's to pick winners. When you don't know what will happen, and right now we don't know the future. The future has not been written yet. Yeah. So don't make this mistake that who will be the winner for the future. Yeah.
I think it also puts a lot of stress on you as well. Like, you have to find the winners. You have to find the right, the right companies. Do so much research. I mean, I remember when I was first going into it, I was thinking, I have to look at the companies to see where the economic cycle is, and what's doing well now. Is pharmaceuticals? Is there real estate? Is there this and that? And then between those, which are the companies with the top, S&P 500 or the S&P 30, the Dow 30. Whatever, it was. I was researching it. That's unnecessary. I mean, now I'm thinking because I do index funds now because of you. It seems completely unnecessary. Completely unnecessary.
If you start to really the strategy that I was talking about that is wrong, it will also have this emotional toll. It will you will become a nervous wreck if this one investment that you made if it goes south. Whenever it comes to your investment portfolio, you always need to be able to sleep well at night. If your portfolio is diversified into different asset categories, and within these asset categories, if for example, especially for stocks and crypto, if you also have diversified in that categories, and you can do that easily with index funds in the stocks, and if you buy, let's say, 5 or 6 big crypto projects, you are also diversified in crypto, and if you do that, you will be able to sleep at night. You will be able to sleep well at night, whatever happens, because you will know that your portfolio will not go to zero. You will know that if something is going down, something else will go up, and so on.
Yeah, I think diversification, and even within, and also the diversification in terms of asset class, but within the asset class itself. I think that's the key. I think stop trying to predict what's going to happen in the future, and stop trying to follow these so-called gurus, mentors, companies who tell you can work it out and you can become the overnight millionaire. I think the idea.
I know a lot of people, who just followed one expert who was telling them, gold will be the best investment, or silver will be the best investment for the next 10 years, and for example, gold and silver did nothing in the last 10 years.
Yeah.
They did nothing. There is no return, in these precious metals, Now, do I think that they will never have a good return? No, I think that they will go up, because especially if the recession hits and so on. But
it's cycles, isn't it? It depends on cycle.
Yeah, but if you were invested 100% in gold and silver throughout the last 10 years, your portfolio didn't go anywhere. You were basically, after inflation, you were losing money all the time.
Yeah, exactly. So I think it's diversification is the key. So if we now wrap this up, can we talk about the financial success formula once again in terms of the two main components?
Yeah. So, like I said earlier, the most important thing is that when it comes to money making, you should be very aggressive. Okay, when it comes to money making, learning new skills, trying new things, setting up your own business, and so on, you should be very aggressive. But when it comes to investing and money management, you should be more conservative. Okay, you should be also more passive. And the key thing is in the money making, in the investing world, the key thing is don't make big mistakes. This is also one of the Warren Buffett the guidelines, his most important guidelines. Don't make mistakes. If you lose your entire investment, there is no way to make it up. So you should never go into some really risky things, where you can lose a lot of money, because it's very hard to get back to 100% at the time. So if you lose, let's say, if you go with your entire portfolio into a losing investment and you lose 80% of your money, then you need 500% return or 400% return to just break even. So it's very, very important to be a bit more conservative when it comes to investing, because we are talking about your hard-earned money. You spent a lot of time and effort to earn money, and then you need to be a bit more conservative how to make this money grow.
Wonderful. And so tell us, Robert, how can we connect with you? Where can we find you on the internet?
Yeah, so it's very easy. Just enter my name, Robert Rolih, in Google, or even easier, The $1 Million Decision. It's my book, the best-selling book. So just enter the title of the book or my name, and you will find my website. I also have a free webinar there. I have my newsletter there. It's also free. So you will be able to subscribe, and you will be getting some articles in the coming months and years.
Wonderful. If you're listening to us on the podcast, then the links to Robert will be on the show notes. And if you're watching us on YouTube, then down below in the description section, we'll have all these links too. Do check him out. I can absolutely vouch for him. Like I said before in the Moonfire feature, he is one of my mentors, and he's actually helped me with investing, because until then I was into day investing, into Forex investing, and oh my God, the amount of money I lost. So all the mistakes we've been talking about, I've done them all. So I'm one of those people. But hey, I always share myself that I learn from my mistakes, and I'm asking you to learn from my mistakes too. Go check out Robert and see how he can help you and help you become financially successful. Well, thank you so much for being such an amazing guest, Robert. It's been a pleasure having you.
Yeah, thank you for inviting me. It was really a pleasure to be here. Thank you.
And thank you for listening to me, Robert, today on Money Talkies. I will be back another episode with another amazing guest, finding out how you and I can build a better business and become more wealthy. Until the next time we meet, this is Gull signing off. Take care and bye for now.